Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today I was talking to my 26 unit apartment complex property manager and I was talking about insurance. So this is the time of year where my insurance renewal is coming up. It's due August 12th of 2024. So what I always preach to you guys on YouTube as well as to my mentees in the mentorship program is you want 3 quotes, at least 3 quotes. And for those of you who've been following, you know I'm huge on replacement cost insurance. So replacement cost insurance is if my apartment complex burned down to the ground, what does it cost to build it brand new to today's standards? So for example, I bought my 26 unit for $500,000, but is it going to cost me $500,000 to rebuild it in 2024? No, right? Because labor cost goes up, material cost goes up. So in 2024, to rebuild an apartment complex that's 26 units in Oklahoma today, that's about $3.3 million, right? If the whole thing burned down at a total loss, I'd basically get $3.3 million. Of course, insurance is going to nickel and dime you, so not the whole thing, but let's just, for the sake of this example, you get $3.3 million. And I can rebuild a brand new 26 unit apartment complex from the ground up. So I've owned replacement cost insurance for 2 years now, going into 3. But the price has been going up, right? So Oklahoma, there's wind, there's hail, there's tornadoes, right? And it's the Midwest, so sometimes snow too. But the first time I got it, it was $20,000, right, for replacement insurance. I renewed it the next year, it was $25,000, and for this year, the renewal was $30,000. So every year, my cost went up, and every year I would shop it around multiple times, right? So I have 2 brokers that I work with, or like maybe 4 brokers that I work with. And I just said, you know what, like $30,000 is a lot for insurance, right? So I'm getting the best of the best insurance, right? Like worst case scenario, great insurance, right? But now I'm starting to kind of change my tone a little bit and looking at more affordable insurance options just to get a comparison. So what I did was I emailed all my brokers, said, hey, give me quotes for actual cash value insurance. So replacement cost insurance just gives you the cost to replace the home. Actual cash value insurance is cheaper because you can get a lower amount, right? So like for example, actual cash value insurance for my same 26 unit, it's about $1.2 million. Replacement cost insurance is $3.3 million, right? Because they're giving you the cost to replace it versus actual cash value is it factors in depreciation of the asset, right? So I could have a 1.1 or $1.2 million actual cash value policy, but if it were to burn down to the ground, they would basically assess the roof, the building, the infrastructure, and then depreciate it. So I don't get the full $1.2 million. They might depreciate half of it because half of its life is gone, and then give me the rest, which is like whatever, let's just say 600,000. Right? So pretty much with actual cash value insurance, it's going to be cheaper. So I got a bunch of quotes, right? So I asked all my brokers and all the brokers were just like, oh, like it's actually the same cost or more expensive. So I just said, okay, well, that's not the answer I wanted to hear because conceptually I know that actual cash value should be cheaper than replacement cost. So I just kept on asking around and I asked my property manager, hey, do you know a local person in Oklahoma who does insurance? Because usually they might be cheaper, right? Versus these national people who are not in state. So he gave me a contact. I reached out and he actually gave me a replacement cash value quote that was $23,000. So if I want replacement cost insurance, it's $23,000 versus, which is better than Travelers, which is $30,000. So already that's a $7,000 a month in savings, right? But I asked for an actual cash value policy at 1.2 and it came back at $10,000. Right? So I went from 30,000 replacement costs through Travelers to 23,000 through like another insurer. It's probably not going to be as good as Travelers, or actual cash value of 10,000. So now I have a $13,000 spread. So now the gamble is, okay, do I want to save money today or pay for $10,000 for peace of mind? So to me, it really depends what your end goal is. So I asked myself the question, if my 26 unit apartment complex burned down to the ground, do I even want to rebuild it? Right? Do I want to rebuild it? Like, do I want to go through the stress of doing ground up development, ground up construction, which takes 3 years? And my answer was no. right? Like I'd rather just take the money, clean up the lot, do demolition, clean it up, and just sell the land to a developer who wants to do it, right? So, because of that, I was just like, you know what? Maybe I don't need replacement cost insurance. That's only needed if it burns down to the ground and I want to rebuild it down to the ground up. And in this case, I don't want to do that for my 26 unit, right? Like I'll just, if it happens, unlucky, take your money, take that money, and I don't want to deal with the ground up development. Just take my money and I'll go buy something else, right? So that's what's making me pivot to actual cash value, because actual cash value, it's cheaper. And insurance companies, they always charge you more money, but when you need them and you file a claim, they're gonna try and nickel and dime you and find exceptions because they don't want to pay you out, right? That's the nature of the business, right? Unfortunately. So because of that, I have a distaste towards insurance. My property manager agrees, and he just said, well, it's the gamble you're taking, right? So if actual cash value, if my whole apartment burned down to the ground and I have a $1.2 million policy, and they say half of it's depreciated, so I only take home $600,000, of which I owe the bank like $300,000, so I have $3,000 pocket, but that's how much I put in the deal, right? So with actual cash value insurance, basically your hope is that you pay off your loan, so your lender's happy, because all lenders care about for the most part is, do they get their money back? Can you pay off their loan? So they do have requirements as to how much insurance you need. So I'm trying to run by my new lower insurance by them. So remember, I went from 30K to 23K to 10K, but it's 10K, it's cheaper, but it's a shittier insurance product. It's a worse insurance product, but what you get what you pay for, right? So I'm intentionally buying something cheaper with less coverage versus I could pay more for more coverage, right? In hopes that I never use either, right? So it's a gamble. So my property manager was like, you're gambling. Like if it were to burn down tomorrow, basically you pay off your loan, you get back the money you put in the deal, right? Remember I put in about $400,000 in the deal. So I pay off my loan, I get my $400, I break even, I do demolition, I sell the land, however much that money gets me, and then I take the money and go somewhere else, right? And I get all the monthly cash flow since then. So because of that, I was like, you know what? If my lender approves of it, I'll probably go to the cheaper insurance policy, because that's significant. Like the fact that I'm saving $20,000 a year, that's almost like $2,000 a month in cash flow, which is like 3 units in Oklahoma, right? That's pretty significant. So, I've kind of taken a step back, and if the replacement cost insurance was like 10K, let's say like 15K or even like 18K, that's reasonable. But 23, it's like, it's still too high. And so, I'm scaling back insurance for this year, and then I'm probably going to ask this guy for a quote on my 20 unit, because I just got replacement cost for my 20 unit and it was around like 15K. So if I can lower my cost of insurance, it can help me out a little bit, right? So you really have to be methodical in how you do it. Like with my single family homes, I have actual cash value. With my multifamily, I did replacement costs, and I was scared. That's why I bought the best insurance, because I just thought, hey, I never bought apartments. Let's buy the best insurance, replacement costs. And to be fair, I was doing a lot of renovations, so there's a lot of risk, right? There's a risk of damage, fires. So maybe during renovations, it makes sense to get replacement cost insurance. But once it's stabilized and more and stable, and if it were to burn down, you don't want to deal with the headache of rebuilding an apartment complex, and you don't maybe like the area as much, right? Like, there's always good real estate deals out there. So just for me, I was like, you know what? I don't want to rebuild. So that made me think, okay, I should get actual cash value insurance and just be able to recover my money, pay off my lender, clean up the dirt, sell the dirt, and then move on, right? Because sometimes you can sell the dirt at a premium to developers in the future. So it was a very insightful question. And, he's managed multiple apartments, but he said, you're just rolling the dice, right? Like, you hope to never use insurance, and hopefully you never do. But when you do need it, obviously replacement cost is going to be better than actual cash value, but it's a gamble, right? Like if you're paying $20,000 more a year, times that over 10 years, that's $200,000. But in reality, what's the chance of a total loss in an apartment complex, right? So maybe if half the apartment complex burns down, you know what I mean? Like what's the chance of a total loss, right? So anyways, hopefully you got some value from my conversation with my property manager talking about my insurance. I'm leaning towards that cheaper option. I'm going to get a quote for my 20 unit and keep you guys posted, because to me, I want to take that $2,000 a month in cash flow, allocate it towards saving it for my next down payment on a property, And knowing well that there's risk, right? That, if it burns down, well, I don't have replacement costs, right? So it's a risk that I'm taking at a lower cost. So let me know what you would do. Give me your thoughts, opinions. Maybe you don't even know what insurance you have, right? So take a look. Is it RCV or ACV? ACV is the cheaper one, right? Most people don't have RCV. So you probably have ACV. Anyways, if you want to learn how to buy multifamily with guidance, check out the mentorship program. If not, drop questions below. I love to answer your questions in these free videos to give value. Please share these videos, like, comment, subscribe. Thank you so much.